pour a glass.
Pour a glass. Cheers, l'chaim. To good times ahead. Okay, on the equity side, so we have investors. We have investors who want to invest in multifamily assets in Los Angeles. They don't want to do the work themselves. They don't have the energy. They don't have the time to find the deals. So they call up the Goldfinger Group and they say, what do you got? What type of deals can I invest in? You have people who have been a little bit fearful of where the market is, or maybe very fearful of where the market's going. You have other people in the Los Angeles apartment space that won't go into people's apartments. So it doesn't matter how good the deal is. So those people are out of the market for the time being. And then you have opportunists like ourselves that are saying, look, those people are out of the market. We're in the market. We're going to wear our masks and our gloves and sanitizers, and we're doing an inspection on. We have 19 units right now that we have that we're buying, and we're doing an inspection on Friday, and we'll see however many units we can get into. But the point is that there's a lot of buyers that have left the market either due to fear or due to health concerns. And that leaves us with an opportunity to be the guys in the market that are adjusting our underwriting but still actively buying in this market.
We have seen lenders get a lot more conservative with the way they look at deals and the amount of capital that they have in the markets themselves. They want to be able to cover their basis, and so we're seeing lower leverage, we're seeing higher interest, and we're seeing them require a large reserve on hand when you close. People who were buying deals can't afford it. They're getting lower leverage, so where they were coming up with $500-600 grand in equity to take down the deal, now they need $700-800 and they just can't afford it. So we've actually seen, due to how the lenders are changing their landscape, people are actually dropping out of escrows, canceling deals because they can't buy it now, or they have to put too much equity in the deal and they don't want that much equity in the deal. So we're definitely seeing a shift there as well.
As we open up the economy again, which is happening very shortly, we will see more changes and more lenders coming out of the woodworks and saying, okay, we're back at the table. Let's make it. Yeah, and it's about being able to identify the risks, identify the questions, and understanding our worst case scenario. And that's why we've adjusted our underwriting for anything that we're looking to buy right now. Again, we're dropping our rents. We're making sure we have cash on hand to get through a recessionary period. And that's really what's important, is not to say, okay, time out for us, everyone go home and come back in 3 months. It's let's keep going strong, but let's make sure that we're aware of the risk that we're getting into and underwriting accordingly. After every economic cycle, the prices in the next cycle have been higher. So if you look in 2006, 2007 at that peak, right, versus the peak that we were just in 2020, I mean, the prices were like around double in certain sectors, right? So in my mind at least, things for the next cycle will be even higher. It's just a question of when are we going to get there.
And you brought up a really great point, is that it's not a matter of just being aware of the risks, it's also accounting for them. So understand them, but then also implement those risks to the way that you're looking at investments or deploying your capital.
Absolutely. If there's anything that you guys want to know, that you want us to talk about, real estate, non-real estate, we would love to embrace that and add value to you in any way that we can. When we started talking about what are we going to talk about, I said, I don't care what we talk about. I want to do two things. The two things I want to do is I want to add value to the audience in any way that we can, and I want to make sure that there's an entertainment perspective. So for the entertainment, we have Max, and for the adding value, we have Matt. So I think
I don't know how much you've done during this whole video.